Good morning, everyone. Welcome to Moneycontrol. I'm Karunya Rao, and today we'll be discussing the blockbuster deal that was announced over the weekend, the merger between PVR and INOX. Well, according to the announcement, the press release, there's going to be a share swap deal. If approved, it will create India's largest multiplex business with 1,500 odd screens in 109 cities. Let's understand it from an analyst's point of view. Nitin Sharma joins us from MC Pro to help us understand how the deal math will work and whether or not it's going to yield good results for investors. So that's the big question we're going to address. Nitin, hi, morning.
Good
Tell us
morning, Karunya.
a bit about the merger math because under the agreement, Inox shareholders will receive 3 shares of PVR for every 10 Inox shares, if I'm correct here. And considering the closing price of PVR and Inox on 24th March, how is the math going to work? Has it been bought at a premium? Has the merger happened at a premium?
Right. So, as you rightly said, that swap ratio is for every 10 Inox share, they will get 3 PVR shares. So, if we consider Friday's closing price, that was around 546 for Inox and 1821 rupees for PVR. The math work out to be the implied valuation works out to be around 6,685 odd crores for the Inox, which means a per share value of 546. Now, since Inox share close on Friday at around 470 rupees per share, so it's premium of around 16% on the CMP.
Okay, all right. And what lies here for investors? Because right now, what we are looking at, it's going to create a multiplex behemoth. There's of course the CCI approval that's pending. So should investors start rejoicing now, or should they wait for what CCI has to say? And if there are any other points that you would like to highlight.
Right. So that on combined basis, it will create a largest multiplex business in India with 1,500
Yeah.
around screens, and revenue-wise, they will have around 40% revenue of the overall market, 40% market share. So that effectively means that it becomes a kind of a monopoly. So ideally, CCI should come into the picture for the approval. Now, how soon it will take, how soon the deal will be closed, it's anybody's guess. But definitely, a role will be played by the CCI.
But what is likely? What are you guys expecting?
So our expectation is that based on the 2016's notification, CCI's jurisdiction basically looks into last 5 years of the revenue of the company as well as their total asset. So if you see that the total assets more than 8,000 crores or a revenue of 1,000 crores puts them into CCI's jurisdiction. So effectively, it do mean that CCI will play a role.
Okay. What about the sector overall? Because both the stocks have started yielding good returns in the last few months, but before that, because of the pandemic, they were severely hit, and finally they are back to normalcy. Things are looking up, especially for PVR, which MC Pro also extensively covers. But are the prospects looking good if there are no more COVID-related hurdles? Do you think people will once again, uh, you know, go back to the movies and start consuming it in a normal way?
So in our analysis, we found out that the footfalls have increased considerably in December quarter for the fact that typical outings involve traveling as well as going to restaurants, going to multiplex to watch cinema. And these numbers have been encouraging for both PVR and INOX. So if I talk about PVR only, their per ticket price have kind of increased to 239 rupees, which is
Yeah.
higher than what they had in pre-pandemic. Similarly, spending per head, which basically involves food and beverages related expenses, that also has surged quite a lot to almost 129 for PVR. Again, higher than what they had pre-pandemic. So overall, all the KPIs are quite robust. Also, if you look at the footfall in the third quarter, that was close to 1.5 crore. Again, encouraging number. Finally, if you look at the pipeline, movie pipeline that is there, quite a lot of big budget movies of Amir Khan, Salman Khan, and some of the international movies are going to come in next 2 to 3 months. So that should sustain the interest of the audience, and footfall should increase from here.
And what about financials? Because right now, this will create a multiplex behemoth. Now that the competition will be far less in the listed and in the organized space, will the screen openings be more calibrated? Will the expansion plan will be more, will perhaps slow down a tad? Is there anything on that lines that you expect?
Right. So combinedly, the entity would have more than 5,000 crores of the revenue pre-pandemic basis. So that itself is a quite a huge number. Secondly, if you look at it around post-pandemic, an estimate suggests that around 8,000 screens are there in India. Roughly 35 to 40% are into multiplex with the multiplexes, and rest are the single screen. Now, last few years, single screen have struggled to compete with the multiplexes because of the economies of scale as well as the consumer preferences. Hence, multiplexes have expanded their screen. If you look at PVR, even during pandemic, they increased their basically number of screens. So around 800, 810 to they have taken it almost to 866 screens pan India. So that has worked out well for them. Secondly, when you look at a combined entity, Inox KPI, the ticket value per head, spending per head, is quite lesser than the PVR. So on the per ticket basis, PVR's is 6% ahead of Inox, and on F&B revenue per head basis, it's 33 ahead of Inox. So once these two entities combine, there are likely to be overall increase in these parameters, and that is a net positive for the company. Secondly, on a combined entity basis, these are quite strong player now, literally controlling more than 50% of the screens in India and in the multiplex domain. So they will get the pricing power as well as economies of scale. So significant synergy should be there.
But you know, if you look at COVID-led lockdowns, OTT has been a huge beneficiary of that because a lot of these big banner films also started going online and releasing online. Now that the trend is slightly shifting, would you suggest that there is no real threat from OTT, especially to big banner, big budget films?
Right. So what has happened with OTT is that during the pandemic, all sort of OTT, whether it's video OTT or audio OTT, has picked up. Everybody spend more time on it. They gain more subscriber. Some of the OTT players basically rationalize their subscription and increase multifold. Now that was a good thing for small budget movies. It becomes a very easy avenue to directly go to the audience without trying to negotiate what kind of release they can get, how many screens they need to get, what kind of share they have to give to the distributor as well as the theater owners. But for big budget movies, if you look at it, any big budget movie, they're around 40%, 50%, even 60% of the overall collection come from the box office collection, which they cannot forego. For example, if you look at Bahubali 2, so around 500, 600 crore of their box office collection in 100 days, collection overall collection in first 100 days came from the box office, from the theatrical release. They had good 6,000, 6,500 kind of a screen release. So overall, because of a big pie, now this revenue potential cannot be replaced by an OTT player. No doubt, it's a good revenue, but uh, I think for now, a simultaneous release on digital platform can be uh, foregone.
Nitin, for those investors who are holding Inox shares and those who are holding PVR right now, what is your verdict? I mean, are Inox investors likely to see a bigger benefit because now they will own a good, a fair amount of PVR as well post the merger?
Right. It's a. I'm sure every investor had this question. So based on our estimate, we feel that even if we do not include this synergy impact, the deal would be EPS accretive to the extent of 7 to 8%. That effectively means that there is a good upside even at current levels. Also, because now it becomes a dominant player in this space, so they should obviously be getting better revenue and margins should improve. Uh, Even during COVID, PVR rationalized their rents as well as other fixed costs. So they are in much stronger position on the cost structure wise than they were during pre-COVID. So that way, it leaves a quite a scope for them to grow. Also, as I previously pointed out, that per head ticket prices as well as the F&B revenue per head are going to replicate it to the Inox screens as well. That another gives another 10 to 15% kind of a jump to immediately towards their top line. So all in all, I think that as the footfall rapidly improves, a big pipeline that is there for movies comes into the front. That should be overall positive for the PVR and drive the good share price growth from this point forward.
So how are the shares likely to open today? What's your prediction?
I'm hoping that it should see a good jump. If you look at last 1 week basis, Inox pretty much share price jumped almost 2 times that of PVR, primarily because the expectation towards the deal. But if you look at the overall YTD basis, year to date basis, PVR has already jumped 40% odd, and 32% growth was seen by Inox share, and on a low share basis. But still, I believe that good 4 to 5% kind of a jump would not be unreasonable.
I'm sure investors, especially those who joined the bandwagon after PVR's and Inox's correction, would be rejoicing right now. But you continue to be optimistic on PVR. It's a buy from your end, from MC Pro.
Yes, yes, yes. So at Money Control Research, we continue to believe in this overall recovery story of the PVR as well as the entire multiplex industry, and we remain buy on the stock.
Okay. All right, let's see how the stock opens. Just a few minutes away from the market open. Nitin, thank you so much for joining in and helping our viewers understand the contours of the deal and how it's likely to play out in future for all the investors, those who hold the shares of Inox and those who have invested in PVR. Thank you for joining in. And thank you so much to all our viewers for tuning in early in the morning. Have a great trading session. It's a good buy from our end.